IVM.
Hi, everybody. On behalf of the team at IVM Podcast, I have a request for you. We'd really appreciate it if you could go to ivmpodcast.com/survey and fill out our survey over there. It's going to take a few minutes to do, but it gives us some really interesting information that we can take to advertisers and brands about who's listening to the network. If you're comfortable giving us your email address, while you're filling out the survey, we'll enter you into a random drawing where we'll be sending out a bunch of IVM swag to some of our listeners. Last year we sent out coffee mugs, and this year we're hoping to send out much cooler stuff. That's ivmpodcast.com/survey. We really appreciate your help.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, P50 on Twitter, and what a horrible, terrible year it's been for all of us, man. Let's just hope that everyone at some point of time in the near future gets a vaccine, and more than anything else, let's just hope 2021 is a better year for all of us. And there are some people who feel that 2020 was just a trailer, but it's the end of the year. This is the last episode of Paisa Vaisa for the year 2020. And look at the stock markets. What a wild, absolutely wild ride. Nifty was down 40%, and then it's gone up 80%. It's probably at an all-time high as of now. And all of that in the same year, something that at least I haven't seen happen before. So to break down this crazy year and have an outlook for the next year, I'm absolutely and totally thrilled to have Aditya Birla Sunlight Mutual Fund for the first time on Paisa Vaisa. And I'm really thrilled to have Mahesh Patil, the co-CIO at Aditya Birla Sunlight Mutual Fund. Mahesh, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Yeah, hi Anupam. Yeah, nice to talk to you again.
Thank you. And guys, if you heard Mahesh saying again, you should check out MF101. It's a series of 12 episodes that I did with Bloomberg Quint and the entire fund management team at Aditya Birla Sunlight Mutual Fund. Just search on your podcast app for MF101. Mahesh is there, Manish Dangi is there, a whole range of people from Aditya Birla Sunlight Mutual Fund talking about a nice big range of topics. So coming back to today's episode, Mahesh, let's start with the wrap up for this year. You know, you've seen 20 plus years of investing. Given the kind of experience that you have, just put 2020 in context for our listeners. Was it a rare year? In your experience, have you seen anything of this kind happen before? Let's start from there.
Yeah, so I think I've been in the market now for almost 25 years and seen many ups and downs in the market. We've seen big corrections, more than this 40% correction, what we saw. I mean, we saw almost 60% correction during the global financial crisis. Then there was the dot-com bust in 2000, when the also market corrected by around 65%. We had the Asian crisis prior to that. We had a taper tantrum, right, in 2013, where the market corrected by around 35%. And I think this correction, what we saw was one of the fastest correction I've seen. And normally what happens is that you see a correction in the market consolidates, bounces back, and then there is another leg down. But this happened in a matter of couple of weeks, actually, literally. And equally fascinating was the fact that the bounce back in the market was also equally sharp and swift. I mean, this is the fastest recovery what we've seen in the last, in my history, at least in the markets. We have seen market again breaching the earlier peak. So in that sense, I would say it was a bit different. It was too quick, too swift, and here this crisis was again a very different crisis than what we had seen earlier. Like in the global financial crisis, it was the financial markets. The banking system and this thing which went down. Here it was led by a pandemic, and I think. More importantly, what we saw this time was that the response from the central bankers and the governments was also equally swift. I think all the governments and the central bankers have learned from the previous crisis, and the response in terms of trying to infuse liquidity, make financial conditions easy, reduce interest rates, provide fiscal stimulus, happened very quickly, and that's the reason why the markets actually reflated back so sharply. And I think that's been a unique feature and very difficult to time these kind of markets, right? I mean, when things, especially for large portfolio managers to move around, it's not easy. The only way if you have invested in the market and stayed put, I think you would have been able to ride this volatility.
So, Mahesh, let's break down 2020 let's look at this from a past perspective, whatever has happened so far. What according to you, were the key trends that you observed both on the economy and the market? Because obviously both are linked in some kind of. So anything that surprised you? It's been almost 9 months since this pandemic, and it's been what I think it's almost been a year since the first case was reported in China. So when you look back now, any key trends that that you observed on both the economy side and the market side?
Yeah, so I think clearly, I mean, you would be surprised. I mean, we haven't seen this kind of a contraction in the economy, right? Because this time around, it was because of the pandemic. There was a total lockdown which was there, and India it extended for a larger period of time, where the economic activity almost came to virtually to a standstill in certain industries, and that's why we saw the contraction. The GDP in the first quarter was in this fiscal year was more than 20%. Even second quarter was around 10%. So that kind of a contraction is not what we've seen in the earlier crisis. The GDP didn't contract that much. So that was clearly, I think, one big differentiating factor in this crisis, I would say. And but I think equally, because this was kind of enforced because of the lockdown and not really a financial crisis what we had earlier, the recovery also has in the economy growth has been very fast. So we have seen a lot of sectors going down, minus 10%, minus 20% in the first quarter. And equally rapidly, we have seen in the last couple of months, many sectors, industries are actually come back to the pre-COVID level, okay, what it was earlier. And that is because as the lockdown got lifted, people started to go back to their normal work. We've seen the sectors reflating back. Sectors like auto, for example, has bounced back fairly sharply. Even the other sectors like retail sector is also now back. There are a couple of sectors which are because of social distancing and other factors are still not there. But like for example, airlines, then entertainment, I think they will take time to come back. But I think the swiftness of the recovery has also been pretty amazing. And I think this period has also seen interesting trends also emerge, because for the first time we've seen such a extended period of lockdown. People are working from home, and increasingly what I've seen is that many companies in this crisis have been able to actually look at where they can cut down on their costs. Okay, which are the normally you take a lot of costs for granted, like for example, travel cost, right? Just to give you an example,
Sure.
I think people have started really look at whether really you do that much amount of travel, or you can use technology actually to get your work done. And and we've seen that in this crisis, while the top line has declined, the profit hasn't really declined as much, right? Because there's a lot amount of cost saving, and many companies actually expect that cost savings to continue going forward. And as they come out of this lockdown, and as things normalize, we would expect actually margins for quite a few companies to improve going forward. And a lot of companies are now starting to really look at work from home as a new normal, and especially in sectors like IT and the services sector, you would see many companies, even when things normalize, they would have a sizable portion of their workforce working from home. So that's clearly another big change what I'm seeing. And also the adoption of technology, okay, in this crisis. This crisis has shown us that because you've been social distancing, you're able to meet. The technology has really played an important role in time to integrate all the users, the customers, the employees, and companies have realized that they need to really invest more in technology. And some companies are at the forefront, others have been lagging behind. And that's an area where we've seen a renewed focus of a lot of corporates to really improve their overall technology and to really, because that's going to be the new normal, I think, going
Yeah.
forward.
Yeah. Thanks. So yeah, good one, Mahesh. I think that's a pretty good summary of whatever happened so far. So folks, don't get anywhere. We'll be right back on the other side, where we'll be talking about some crystal ball gazing. I know that last year at this point of time we couldn't have predicted this, but hey, listen, it's the end of the year. A lot of us are looking forward to what's going to come up next. So on the other side of this break, on Paisa Vaisa, we'll be back talking about what to look forward for in the markets, in the economy. Don't go anywhere. We'll be right back on this 2020 wrap-up special with Mahesh Patil, co-CIO Equity, Aditya, Birla Sun Life Mutual Fund.
Hello, everybody. Welcome to another great week on the IVM Podcast Network. If you're not following us on social media, please do. We're IVM Podcast on Twitter, Facebook, and Instagram. One more reminder, people, please go to ivmpodcast.com/survey and help us out. It will take you a couple of minutes to fill out this survey, but it really is very, very helpful for us. For the people who do fill out the survey and are willing to drop us their email address, we're going to do a special drawing and send out some IVM swag to everybody. So please do help us out with that. But what a week it's been on the network. There's so many things to talk to you all about. Let me run through some of the biggest highlights really, really quickly, right? So Sanjay Jha was on Cyrus Says. What an incredible conversation. I mean, I can't say enough about it. Check that out. We had Hansal Mehta on Marukinay's The Note talking about 1992 scam. Amazing stuff. We had Vishal Gondal talking to Nikhil Advani about his career in film. On Storytellers and Storysellers, Vineet spoke to Gunjan Arya, the CEO of OML, and Samiksha Unyal from Bacardi about the history of NH7, the Weekender Festival. On Postcards from Nowhere, Utsav had an amazing episode about the Bushmen of Kalahari. Begin the Journey, Ashish Vidyarthi talks about career choices. On Nankari, they talk about cake. What a fun show that was. And on This Round Is On Me, we had Dr. Sanjay Arora talking to Gauri about Suburban Diagnostics and Company and what he sees as the future of healthcare in India. And for our Tamil speakers, if you haven't been checking out Sivakami and Sabatam, why haven't you? Please do go check that out. Kavita's doing an amazing job telling that story. And with that, let me get you back to your show.
And welcome back to this really special 2020 wrap-up on Paisa Vaisa with Mahesh Patil, co-CIO Equity, Aditya, Birla Sun Life Mutual Fund. On the first part of the episode, we spoke about the past trends and what's happened in this year so far. Now, let's get on to the future. See, guys, okay, so 1 year ago, literally no one on this planet could see how 2020 was going to pan out, the events that happened. From the market's perspective, this 10%, this 10, 12, or I think it's now about 14% year-on-year return that you're seeing on the Nifty. It actually consists of minus 40% and plus 80%. Okay, so if you had slept through this entire year and you saw that the Nifty is up 10, 12%, you'd be like, okay, what's the big deal? But anyway, here we are. New year ahead of us. This is the last, it's the last Monday of the year. It's the last episode of Paisa Vaisa for 2020. And we're making predictions all over again. So I begin this part with all humility and a fair warning. Predictions are just that. Predictions, past performance is not indicative of future returns. So Mahesh, let's start. What lies ahead of us? I mean, do you think that this economic recovery, because it is a recovery, first quarter GDP was down 24%, second quarter was down 8%. I have no idea what's going to happen in the third and the fourth quarter, or in the next financial year. But in your opinion, do you think this economic recovery is sustainable going forward?
Yeah, so Anupam, if you look back, I mean, even before this crisis, okay, we were actually struggling. I mean, our economic growth for the last 2-3 years has been slowing down. We have gone through a major reform like, demonetization, GST, the banking and financial services crisis. So you are actually tracking at a growth rate which was well below or a potential growth rate, let me put it this way, right? And then this crisis came in, the COVID crisis, which pulled it down further. As we come out of that, there are a couple of things. I think obviously there will be normal reflation back as things normalize, as now we are coming into the lockdown, and we don't expect any major lockdowns. Even if the virus curve, there could be a second wave which could be there, but we know how to handle this. And fortunately in India, the fatality rate is much, much lower than what it is reported if you look at the Sero survey data. So I don't think we need to worry too much about that. And vaccines also, as you know, is around the corner. So this is a trade, okay, where you move from the virus to the vaccine. Okay, that next year is what will play out. But I think the economic growth clearly should reflect back next year. We are looking at 13% growth in GDP in FY22, and then beyond that in FY23 a 7% GDP growth. And I think in this crisis, I think we've been able to actually the true test is like if you're in a crisis, if you're able to do major reforms, right, and emerge stronger. And I would say that in India, we've taken that challenge. The current government has ushered in a new set of reforms, okay, in this period. A couple of ones, major ones being the agri reforms, the dismantling of the APMCs, the reform on the PLI scheme, right? The production link incentive schemes to really stimulate manufacturing in India and make in India, right? Is going to be again a big driver, and also the ease of doing business, okay, which has been there for some time. So I think I'm pretty confident and getting a lot of hope that we are actually getting into a new economic cycle, growth cycle for India, and this growth will probably sustain. And I think if we unless do something silly, I think we are in for a good, strong recovery and growth in the next few years. And also, the financial conditions globally are very, very benign. I mean, the interest rates are going to remain low. Central banks globally have said that they will keep interest rates at zero for the next 3-4 years. There's enough liquidity. And India has the basic ingredients, okay, for growth, right? It's a large consuming market. Demographics are really good. So with that global liquidity, if we're able to channelize over here, I think we can have a very good combination for good growth of around, say, 6% or so, which is fairly good in the global context, right? Where things are at this point in time.
Sure. So, okay, Mahesh, as we wrap up this episode, there are two questions. I think both of them are pretty, top of the mind for our listeners. Both are quite common questions. I'll start with the first one. So, a lot of investors have missed this entire rally. Nifty is at an all-time high. We are up about 80% from the bottom. We were at about 7,500 in March. Now we're at about 13,500. So it's been a huge rally from the bottom. People have their own points of view on that. Maybe it's a bubble, maybe it's not. Maybe, but for those who have missed out completely, from here on, what do you think investors should do?
Yeah, so that's common question, okay, which gets asked. And I would say that even at these levels of market, right, it sounds that the market sits at an all-time high. I think looking at, as I mentioned earlier, we are at a cusp where we are seeing a new economic cycle, growth cycle coming in. And if we really look at, while valuations might look a bit expensive, but looking at the past, I think we have grown below the normal trajectory in the last 5 years. And the first time actually we are seeing now corporate earnings getting upgraded. We are getting into an earnings upgrade cycle after 4-5 years of downgrade cycle. So we sat down with a team, and when we look at forward and make our projections and look at where the markets could go from even from here, we still see around 10-11% return CAGR in the market from here over the next 3 years, which I think is a fairly good return to look at, considering the fact that where interest rates are, right? We know our the bond rate, the G-Sec rates are around 6%. The bank deposit rate is now around 5% or lower. So that's a fairly good return, I think, which equity will offer, which will probably be the best returns any asset class could provide in that time frame. And therefore, I would urge investors that clearly, even from here, while let me admit also here that from a near-term perspective, okay, there could be some volatility. We could see some pullback in the market, which is quite likely. But I think one should continue to invest into the markets. I've seen lately a lot of outflows from the market, especially from mutual funds. I would urge investors to stay invested and even continue to allocate money over here. I think the macro conditions are going to remain fairly benign and good going forward. And as a result, I don't think the market, you will get it very cheap. I mean, one would like the market to be probably 10-15% lower to enter into the market. It might happen, it might not happen, but there's no point waiting for that. I think one should definitely start investing and do that in a staggered manner. Don't do it at one go, looking at where the market is at this point in time. And market always gives you opportunities. I think take those opportunities, okay, when there is any correction in the market.
Okay. What about SIPs, Mahesh? I mean, I have one and I'm still continuing it. I continued it in March and I'm continuing it now also. For someone who's really in for the long term, for someone whose SIP is a core part of his financial plan, what would you say to him?
No, I think SIPs. I think you should continue to never stop your SIPs and continue with that. I think worst thing is to stop SIPs when the markets are down. Because that's the way you'll actually be cutting your losses at the wrong time. So I think we've seen that historically, and even I'm looking at data from the 2008 peak. People who have invested at the peak of the market, and that time, there was a huge euphoria in the market, and we are nowhere near that period at this point in time. While the P multiples will look slightly higher because the earnings are depressed, but we are nowhere in that. Even from that period, investors who started SFP and continue to invest during the ups and downs in the market has still got fairly decent returns, right? And I think there's no reason for anybody to really stop the SIPs at this point in time. And that's the right way, because you don't know, right, whether the markets will go higher from here or will wait for a correction. I mean, waiting for a correction, people have done that, and I think that's really not helped. So I think for retail investors, I think SIP is the best route to participate in this market.
It's very interesting. I mean, 2008 top, I remember we were at some 21,000 on the Sensex. We had gone up 7 times from 2003, from 3,000. And so you're saying that even if you look at that 21,000 market peak in, I think it was Jan 2008, now 12 years later, we're almost in Jan of 2021. So, it's almost 13 years probably. And we are again at a new all time. You're saying that even then people have managed to make fairly good returns on their SIPs, right?
Yes.
Okay, Mike, wrapping this up. Now let's get to specifics. Okay, the outlook for the next few years, your key themes that you're looking out for as we go into the new year.
Yeah, so I mean, if you look at, there are a couple of trends, okay, which we see in this market. Clearly, one is that last 2 years, the market, like CY18 and CY19 specifically, the rally in the market was very, right? Only a few stocks actually went back up, and that's the reason why we saw the Nifty or the main index showed a different return, and actually investor portfolio showed a different return, right? We think that going forward, the market is going to get much more broad-based. And the reason for that is that we're seeing that as the domestic recovery plays out, a lot of the mid and small cap companies will do better. And also with the liquidity coming in, the retail participation coming in, the breadth of the market is likely to improve. And we see that to continue. So that's one big trend which we see. And in that context, again, you will see that probably the mid and small cap sector, which has underperformed in the last 3 years, could do better. Another trend we see is that still slightly early days, but I mean, in the last 3-4 years, defensives did better because there were a lot of challenges which were there, not only domestically but globally. And we saw the defensives and the high quality played out, while defensives will continue to do well. But I think cyclicals could see a big bounce back, both domestic cyclical as well as the global cyclical. And that's a trade which is already started to play out in the last few months. But I think that can continue going forward, because as the economic growth recovers, both in India as well as globally, we will see the cyclicals do well in the next year. And even commodities, for that matter, could do well next year. Another trend which we see is that growth and value, right? That's been growth has done very well in the last 7-8 years, I would say, and value has underperformed. I think now we've seen that as the market breadth becomes much more broad-based, people want to look beyond the top few names. Value would also start to do well, and we've seen early signs of that playing out even globally. So that could be another big trend. And among the sectors, I think sectors which we think will do well are banking and financials. Has come out of this crisis pretty well, I would say, than what one would have initially thought. The overall NPAs are not going to be as bad as what we would have expected. So that could be a good cyclical trade to play out in this fiscal year. And apart from that, I think consumer discretionary, especially the low-ticket consumer discretionary, which was impacted because of this crisis, should see a strong rebound, especially home improvement, consumer durables, where the category itself has low penetration in India. And there are good companies over there with a move from unorganized to organized would also benefit some of these players in this sector. So, and these are broad themes, I think, which we think will play out in the course of this the new fiscal calendar year.
Fantastic. That looks like a whole lot of things to look out for, Mahesh, and That's a wrap on this episode, folks, of Paisa Vaisa. My guest, Mahesh Patil, CO-CIO Equity, Aditya Birla Sun Life Mutual Fund. Mahesh, thank you so much for doing this for our listeners and wishing you, your family, and all the entire team at Aditya Birla Sun Life Mutual Fund a very happy new year.
Yeah, same to you, Anupam, and to all our listeners. Thank you. Pleasure talking to you.
Thanks. And folks, that is a wrap on 2020. Thank you so much for listening to Paisa Vaisa. What a year, huh? What a year. Wishing all of you, all our listeners, a very happy new year ahead. Let's hope things get better for all of us. Stay safe and have a safe and healthy new year. Thank you.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Working Monday to Friday glued to your chair making you feel dull? Worry not. Get your 5-minute weekly dose of travel around the world with postcards from nowhere. Join me every Thursday as I explore the strange, obscure and fascinating parts of the world and bring out facets of travel you may not have thought of before. You can find us on the IVM Podcast app, website, or wherever you get your podcast from.
If you love cricket, listen up. The Edges and Sledges Cricket Podcast is here for you. Hosted by DJ, Varun, and me, Ashwin, we bring a fun, fresh fan's point of view to talking all things cricket. Sometimes it's just the three of us, sometimes we have guests, including current and former international cricketers. For new episodes every week, check out the Edges and Sledges Cricket Podcast on the IVM app, website, or wherever you get your podcasts.